Hi, this is Paul from globaltradingsoftware.com, and this is a Forex trading tutorial using our expert range breakout indicator. Looking at a Monday morning, lots of European PMI data came out this morning, Italy, Germany, actual Europe PMI data as well. So a lot of data coming out this morning, Monday morning, and some great range breakouts. So I want to go through 4 currency pairs in this, just discuss where those entries would be, how those signals came out during this European morning. One thing with Forex is I like to understand the ranges for the Australian Open as well. And this is up here on ASX. Then we've got the Gold European Open, and then we've got London stroke Europe Open there as well. So this is US dollar CAD. We always use the 10 minutes on currencies with the range breakout. So we've had the Monday morning. We're going to look at the entry here. So we did have quite a big range here for the Australian Open. We did have the Gold European Open, again usually a catalyst for Forex. That printed yellow, the tag. The range was yellow, so we're looking for longs or shorts coming out of this range. We've got some resistance above with the overnight highs, so there was no real long opportunity. The short opportunity had to be below these overnight lows. Really strong support zone there. Don't short into support. So we wait for the London Open, which is a very narrow range, but we get the printout in red. So we're only looking for shorts. The range is in red, so we look for the entry breaking out of that support. Remember, don't short into support, just wait for it to break down below, and that's your entry just there. And then managing the trade is very simple. So we have the range breakout, but also we have what's called the manager. It's my trading brain. It looks at volume, average volume, price action, and it basically keeps you in the trade to maximize profit. So we move all the way down here, then we start to pull back against this main bearish trade. Lower than average volume dots underneath on this pullback. The manager's telling you to stay in. Also, the managing the bias ribbon here, the cloud, is still in red, so we're only looking for shorts. It takes different data than the opening range, but what it does is basically it's saying this pullback is low, it's low intensity, stay in the trade. And then, as you can see, we've pulled back down again and we're making more profit. So a good way to manage this trade now is actually to put a trading stop just above that pivot there, because that failed. It's below our entry, we're locking in profit. What we've got to do now is wait for another pullback, see it on the intensity. If we get these cyan dots on green or grey candles, and we get 2 cyan dots on a green or grey candle, 2 on the trot, then the momentum's shifting and it's going up, and that would be the aggressive exit on US dollar CAD. But for right now, we're locking in profit, we're risk free, we're being sensible. The manager, listen to the manager. So then we got GBP Japanese yen. This was the long. Okay, so again, framing your chart, we've got to look, when we look left, we've got big support and resistance zone here. We've got one up the top here, and then the overnight highs from the Australian Open here. We've got that, it was range bound. We get the Gold Europe Open here, it prints in green. We're looking for longs only, but we've got to make sure we're above these overnight highs. So our entry is just above this support and resistance zone just here. So that's our entry long. We then get the continuation with the London Open, again printed in green. So if you were a bit unsure about that Gold Open, which is an hour before the London, you know, that would be the entry going conservative outside the London opening range. We do have this resistance up here, so you've got to think about your risk to reward with that. So when you're looking at that, you've got to take that gold, really the gold open range, and that entry at 149702, and then the stop underneath here. Your risk reward is fantastic. However, risk to reward on the London opening range, you know, you've got to put the stop underneath the opening range to get a decent risk reward up to this resistance zone. So you've got to think about those things as well. But also you've got the manager there to help you. attacks this resistance zone, we come down, we get one down candle, one red candle with higher than average volume, but then all the others are average volume. We start to run out of juice. The bias for the manager still remains green. It gets close to changing, but it doesn't. Then we start to push back up again. So this is where listening to the manager has helped you. Again, now we've got a pivot. We've been sensible. We've listened to the manager. We're locking in profits on this trade. 2 for 2. We're locking in profits. They're both risk-free. We've listened to the manager. We're maximizing profits. Euro US dollar is next. Okay, a little bit more complex. So from the ASX, from the Australian Open, you know, that printed in red, that was a short for those traders for the Asian session now. That was a great short. It did come back up to test against, you see these lower than average volume here, lower than average volume, comes back down again. Finally we get the ribbon changed to green here, and that's around about that gold in London Open. So that those Asian traders trading that short on Euro US dollar had a great trade for that opening range. Really support and resistance for the long here would be the Australian opening range. So when we get the gold, we're only looking for shorts because it's printed in red. So the gold European Open is only printed in red. It comes out of there and breaks that quite a long way. So that negates any short really, because we start to move way out of that range. Comes back down to test just before the London Open. You're not going to take the short there because you're just too close to London Open. We get this big green candle here. The London Open tag is in yellow, so that's each way. You can go short or long out of that opening range. Remember, the resistance really is going to be this opening range from Australian Open. Take the long outside the London opening range, comes into there, the pullback comes down but lower than average volume. Okay, I think we've got real good sort of support here. And it's very, very close. This would be aggressive on this one, but we need to be sensible here. This was our entry. We've got to lock in some profits, or you just come down a little bit, make it risk-free, just wait for the cloud. Does this cloud turn red? We're amber on the ranges, you can see, but it's still green on the cloud, so we're waiting. Leave it at risk-free, see what happens. We're still lower than average volume. It doesn't really want to push down. Let the ribbon tell you. Let the manager say, if that turns to red, just get out the trade. And then finally, GBP US dollar. Again, we get that gold Europe Open here, only looking for shorts, but it comes up. That's fine. Then we get the London Open here. That's printed in green, the tag and the opening range. So sensibly, we're only looking for longs out of there, and we're going to look for a long out of that range from Australian Open as well. So that's our entry there. We've got to be sensible. Yes, I'd love to go long aggressive out of that London Open, and some people probably did, but there was some resistance. We've got to clear this Australian opening range, and that's for me the way to go. But then look at the manager. We come back, we pull back down, lower than average volume dots. We reject those lows, and now we've gone back up again. So where do we put our trailing stop? Just below this pivot. Sensible. We've listened to the manager. We didn't panic, because these moves against the main bullish trend for this current trade, the dots below, the blue dots, are saying it's lower than average volume. The manager's saying just hold in there, just allow that to happen. It's going to push back up, and that's what it did. Now we're making new highs. The cloud never changed to green. Okay, so 4 different Forex pairs there, using the opening range, the expert opening range breakout indicator, along with the manager, to manage those trades, maximize the profits. And a lot of retail traders panic when they get those pullbacks against and just take out the trade, and in the most of the cases, 90% of the time, they've got out too early. And what the manager does is actually keeps you in to maximize those profits as much as possible. Don't get me wrong, it will tell you when to get out as well, and I'll put a video in the description here, a link to watch the training for the manager so you understand how that works. I'll also put the links into both indicators as well. Hopefully this Forex trading education has been useful. There's some great trades there. Just always remember to look left and understand where your support and resistance zones are.